Hello, and thank you for standing by. Welcome to the AGD webinar, What Now? Strategies to Maximize Your Cash, with Kate Williford, CPA. Today's presentation is being sponsored on behalf of CareCredit. During this presentation, participants are in a listen-only mode. The audio portion of the webinar streams through your computer speakers. If you are having trouble hearing, please check the volume settings on your speakers. If your video or your audio is playing poorly, you might be experiencing a bandwidth issue. Please try to refresh your screen or check your internet connection. At any time during the presentation, you may text a question or comment to the speaker using the Q&A box. Our speaker will address as many questions as possible at the end of the webinar. As a PACE-approved program provider, the AGD is required to monitor attendance throughout this 1-hour lecture. As a reminder, this webinar provides 1.0 hours of lecture credit in AGD subject code 550, Practice Management and Human Relations. You will receive your CE certificate in accordance with PACE guidelines. Today's webinar will be presented by Kate Williford, CPA. Kate Williford, CPA, is the owner of the Williford Group, a firm that uses a multidisciplinary approach to accounting and profitability consulting focused on creating a sustainable impact on the quality of life and income of select entrepreneurial dentists. She is Vice President of the Academy of Dental CPAs, an organization that represents over 9,000 dentists nationwide. In addition, Williford is a member of the Academy of Dental Management Consultants and the Speaking and Consulting Network, and is contributing author of Dental Economics and other publications. Kate, the microphone is yours.
Thank you so much for having me today. I really appreciate the AGD spending this time with me and other dentists. I'm here today to share with you that even in this unusual year, many of my dentists are making almost the same amount of net income that they were this same time last year, and some of them even more than they were last year. There are top strategies that you can be using to maximize your money this year and to prevent tax surprises with the increase in income that you may be experiencing. I am the owner of the Williford Group. We're a CPA firm that has specialized in working only with dentists for 45 years. We have clients in over 23 states, and we are a member of the Academy of Dental CPAs. This organization is a way for you to be able to find a dental-specific CPA right near you. You can go to our website at adcpa.org to find another member firm. And I'd really like to thank CareCredit today for being a sponsor. CareCredit is one of the reasons why my clients have lower accounts receivable and they have higher collections, because they're able to offer treatment plans that patients really need in ways that are affordable, particularly in this very stressful financial year. So I would encourage you, as you're starting to rebound from the pandemic closures, to think about where you are starting right now with your business or with your personal finances and where you want to go. Start thinking about what your short-term and long-term goals are, because I've found that many of my clients now feel that some of those goals have changed. I really believe that quality of life becomes one of the most important goals for my clients, and the income they need to support that. You may be like many other dentists who have spent some of the closure time getting recentered on what's most important to you and how many hours you really want to be working, what type of business you want to be running, or what type of business you want to be working for. I believe that the business that you have is a vehicle to help you create the quality of life you desire and the income you need to support that. And even if you're a dentist who doesn't technically own a business yet, if you're working as an independent contractor In reality, you do have your own business, but it's just not as formal as what some other dentists have. So think about what's most important to you so that your goals continue to align in the short term with what those long-term goals are as well. You know, a successful dental practice is sort of like a three-legged stool, and all three legs have to be the same length in order for the stool to stay upright. One of the legs is your production leg, which is what you've been so well trained to do, all of your clinical dentistry. The second leg is sales and marketing, being able to bring in new patients, but also make sure that you're caring for the ones that you have. And the third leg is business and finance. Most dentists feel that business and finance just means accounting, doing some tax returns and some bookkeeping. And if that's all that you were doing on the business side, that leg would be too short and the stool would fall over, or in this case, your business would not be as successful. The most successful dentist business owners have discovered that there's another key component to running a business well, and that's to have a CFO, have some fiscal management, someone who can help them make financial decisions in a proactive way. And that's really where we come in and other members of our Academy of Dental CPAs. Now, I find that most dentists are very comfortable with their clinical skills, but they really falter when it comes to running the business, and that can seem very overwhelming. I talked to a woman dentist today who is just really overwhelmed with trying to find hygienists and trying to find permanent hygienists. She's frustrated with having to deal with the turnover of the temporary hygienists she can find, and it's really pushing her to the point of wanting to sell. So that becomes some of the most difficult part of running the business. So today we're going to talk about ways to strategize your money and become one of the most successful dental businesses out there, even in this last quarter of the year. We're going to talk about how revenue is rebounding, what the latest trends are. We'll talk about different loans that are out there that can be used as a result of the pandemic loans that were offered, cash flow planning, tax credits you can use, what the transition trends are, and saving for the future. Let's open up our first poll question though. Before we get started, I'd really like to get a sense for who's listening today so that we can tailor this program to you. So we'd like to ask you in the poll questions, do you own your own practice? You can share, yes, you have owned your own practice, but maybe you've owned it for less than about 5 years. Yes, you own a practice and you've owned it for more than 5 years, or no, you don't own a practice yet. If you would please answer that poll question, we'd really appreciate it. And Joyce, do you have those results?
Yes, they are coming in. It's about 53% of the people have voted. So we'll give them just a couple more seconds.
All right, well, as I mentioned earlier, if you're just getting started in dentistry, you may have the option to be an independent contractor or be paid as an employee. And it's those of you who are paid as an independent contractor that really are running your own business, but in just an informal way. And that's one of the ways where you can take the most tax deductions is by being an independent contractor and being able to take deductions against that income that would be reported on your personal tax return.
Okay, we're at 61% of the vote. I could go on and close that. So
Okay.
we're to, I'm going to close the poll. And I'm going to share the results. There you are.
Okay, so we have 64% do not own a practice yet. All right, thank you so much for sharing that with me. I really appreciate that. So let's get started with topic number 1 today. Revenue is rebounding and net income is increasing more than a lot of dentists realize. and more than we were anticipating. So this is actually very exciting news. These numbers are coming from the averages of our clients and what we're seeing right now as third quarter trends. Right now, we're doing all of the accounting for third quarter, and so these numbers are actually the real numbers from our clients. We work with many businesses that are around $2 million or less in collections, and another large group of practices up to about 12 million in collections. What I've done is I've gathered here an average of similar practices that are making less than $3 million a year to be able to share with you the real trends that we're seeing right now and the difference. So if you look at September of 2020, the end of third quarter of this year, collections on average are around 1.298 million. And last year at this same time, they were around 1.45 million. So the decrease that we've seen this year is about $156,000 so far through the end of September, and that's a decrease in collections of about 11.5%. If you've been listening to some of the webinars that many of us have been doing this year, we were prepared for this to be closer to 20% this year. So it's actually very exciting that it is only 11.5%. And there are many of my clients that have not seen much of a decrease at all. They've been able to rebound with very similar collections to last year. And we have had some parts of the country where you were not required to be closed for as long as others. So for instance, some clients I have in Montana, they were able to largely stay open, and they've actually seen an increase in collections compared to last year. And then on the overhead side, I wanted to share with you what we're actually seeing in real time right now. The column that says typical is the average of the trends that we typically think of as being an industry standard. And these are for GP practices, by the way. The current numbers are the percentages that we're seeing as of the end of September. We continually track these trends for our clients, and it's interesting to note that personnel expenses are about 2.5% to 3% higher than we typically see. Part of the reason for that is when you received PPP financing, if you did, you were able to spend money in your practice on personnel wages because that qualified for the PPP loan forgiveness. And so that's one reason why personnel percentages are higher. I can share that typically our clients are between about 24 and 25% on personnel overhead. So that's a little bit lower than the average we often see. The other expenses are staying very similar as a percentage of collections. You'll notice at the bottom that we are seeing a little bit of a change in associateships right now. So we've seen a change where the doctors oftentimes are not needing as many associate hours now because of changes in production. And you'll notice the owner is really the one who has not been able to pay him or herself as much as usual. And so that's really where we're seeing the hit right now. Many owner doctors are keeping money in the corporation or in their entity right now to have some extra buffer there, and they're waiting to pay themselves more until they see how the next few months work out. So here's the exciting part, but also the scary part. This has become the perfect storm because collections have dropped, again, on average, about $150,000 in the practice, and many doctors are then thinking that means their taxes are probably going to be significantly lower this year. But we have found that because of those changes in overhead and the fact that overhead has not changed as significantly, that net income has actually only dropped about 4.8%. It has not dropped the full 11.5% because practices were able to save money on overhead. So that means net taxable income this year could be higher than you realize it might be in your business. So it's important to know what the trends are in your practice. We're finding net income is only down about $16,000 so far this year through the end of third quarter. So the cash strategy on our first tip here is net income is the most important number for you, especially when you're getting close to year end and looking at your taxes. So look at your own trends. Don't just rely on what you're hearing about what is going on in practices, and don't forget that that big drop in collections doesn't necessarily mean that your net income has dropped much when you're calculating your taxable income. So topic number 2, let's talk about practice transitions. I do a lot of transition work, and right now the market has really changed in the sense that we have a much higher volume of people selling their practices. We're seeing more startups than we have seen in a long time. So there's a lot of activity. Because many of you said you do not yet own a practice, I do want to talk about buying a practice right now and share with you that you can afford to buy a practice. There were some lenders that stopped offering financing for a while as they tried to gauge the market again, but we are seeing bank financing, so it is possible for you to be able to buy a practice. You're going to want to make sure that your credit score is as high as possible. Make sure you're paying all of your bills on time, and that you can show them that you have the capability of high production and to be able to save. They're typically going to want to see at least 1 year of your production before lending for you to buy a practice. And you can do a startup. If you're thinking about doing a startup, then I do recommend a demographic, sociographic study to make sure that you're picking a location where there's not too much competition, because you will want to make sure you can attract patients to your new location. But we are finding some startups to be very successful. And I would assume that you would not be able to pay yourself for at least 9 months if you're doing a startup. So be prepared to also work at another practice in the meantime if you need to do that in order to make sure you have enough income as you build the new business. So when I help buyers review practice opportunities to buy, I oftentimes share with them that many practices can be a great purchase, but whether or not it's a great purchase for them has yet to be determined. And a lot of it has to do with what their goals are. So I would encourage you to think about your short-term goals and your long-term goals to decide if the practice is actually located where you want to raise your kids, for example, if you're going to have a family, or where you want to be spending your free time. Think about, again, how large do you want the business to be? How many hours do you want to be working? Think about how much money you need to be earning in the first year and then in future years, because a practice can be a great opportunity to buy, but it needs to be purchased at the right dollar amount, and it needs to create enough cash for you to be able to live on in your unique situation. So now's the time to be writing down those dreams and thinking about where you want to go. For those of you who may be selling practices, it's also important to look at what your remaining dreams are that you want to accomplish and whether or not you can afford to sell right now. Many buyers are looking for the opportunity to buy at a lower price than they otherwise would have, because it's very unpredictable what's going to happen with some of these practices and the recovery. So you want to make sure that you're selling at the right time for you when you can afford to do that, and decide whether you may need to hold on to the practice longer to grow it a little bit more and to be able to prove that your practice can get back to that original valuation. So on the financing side, I'd just like to share with you that banks are very unpredictable in their financing right now. Definitely talk to multiple banks. I would recommend that you have 3 banks that you are actively talking to. We are seeing banks change their decision on financing even close to closing. We have 2 right now we're working on where we have changes within 10 days of closing. So make sure that you have multiple banks so you have a backup opportunity there. And we'll talk about PPP loans in a minute, but whether you're a buyer or a seller, you need to be having the PPP loan conversation with the banks to make sure you don't have last minute surprises on that. And interestingly, we're seeing more doctors wanting to sell their buildings along with the practice right now. And the current financing that we're seeing, you should plan on the fact that you will need 20% down to buy a building. Again, you want to make sure there are no surprises there because we have seen, again, some banks change the financing on this very close to closing. Sometimes what the banks will do is they will allow the seller to hold part of that note to then make up that 20%. So that can be an option for you. So some banks can get creative on that. But these decisions really can be costly because if you're the one buying the practice, then it's important to know what this is going to cost you. Do a cash flow projection. Talk to your CPA, talk to a dental specific attorney, make sure you understand what you're signing and what the cash flow will be after making the note payment and after paying taxes. Many people forget to add in that tax component, and that can be a significant change for you, especially if you're not used to paying taxes in that state. So cash flow planning is key right now. The banks are lending on the current financials and cash flow of the business. They're not lending on what the practice used to do in 2019 or what the selling doctor thinks is going to happen next year. They're lending on actual facts of what's happening right now. And that's frustrating some of the sellers because the sellers know the potential of the practice. And on the buyer side, it can be frustrating too because these banks are doing extreme due diligence. And some of the banks are doing that on the front end, which can seem like it's taking too long to get answers from them. But I actually like that for you because that way you know exactly what they're going to offer you. They've done all their due diligence at the beginning, so you can count on that offer. Other banks will offer you some general lending and give you rates, but they don't actually do their due diligence until closer to closing, and that's when you can see some changes. Also, due diligence with the patient charts is vital as well. You really want to dig into that, and if you don't know how to do a chart audit, there are plenty of practice management consultants out there who can help you with that, and they don't even have to go in person with you. Oftentimes they can just log in and advise you. But it's important to know that you can actually do the production of the patient base that you're buying and to make sure that you understand how much production is there to do. We now have opportunities where we can download so much information about the practice management software to show you where there are profit leaks and look for potential areas of growth, but also look for red flag warnings that you should be aware of. For instance, in California, if you're buying a practice there, you may be in that situation where you're having to convert a practice from Delta Premier to Delta PPO, and you can see a 25% reduction in your collections. So that needs to be factored into your cash flow planning. So look for those key aspects when you're doing your due diligence. And again, I highly recommend using a dental specific attorney, use a dental CPA, so you're working with people who understand what they're looking at and can make sure you're as protected as possible. So I would definitely use this time to buy wisely. And on the sales side, if one of you is selling, to make sure that you also are offering all of this solid information to the buyer. The buyers are expecting to see these details, and you want to make sure you're coming to the buyer with clean financials so you can show exactly what the practice overhead is and what that potential is for them. So step number 3, let's talk about cash flow planning. You can prevent surprises. One of the keys at this time of the year is to look at a tax projection. You should definitely be talking to your CPA about planning ahead for your taxes, even if you don't yet own a business. So if you're an independent contractor and you've been making money during the year, you should want to know what you may owe in taxes next year. You might have been making your quarterly estimated tax payments, but you don't know for sure if that was the right amount because your income probably did change this year. And if you're a W-2 employee, then probably the employer is using the standard tax tables to withhold taxes for you. But that only looks at the income that you're earning from that one location. And it's assuming that your pay is the same and consistent every single pay period. And that's typically not what we saw this year. So you can double check to make sure you're withholding the right amount in taxes. So you're prepared for what you may owe in April or what refund you might receive, so then you could change your withholdings or your final estimated tax payment to reduce them. All during the pandemic, we were helping our clients with short-term and long-term cash flow projections. You can do short-term planning even down to the week or the month. Not many people like to think about budgets and plan ahead for the future, but I would encourage you to think of this as a spending plan. Look at what you think your collections may be for this year and the ways in which you need to spend money or want to spend money. And I would encourage you to break it down into smaller chunks. If planning a year at a time sounds too long and is kind of difficult to do, then break it down by week or by month or by quarter, so you really have an idea of what your short-term cash flow needs are. And then that can start to grow into a longer-term plan. I find that if you don't set any long-term goals, even for collections or production, then you can never meet those goals because you don't know if you're getting close to it or not. And it's very difficult even for the team to be able to follow you in that mission if they don't have specific goals to aim for. So with long-term planning, think about what your revenue goals are. If you're an associate and you don't own a practice yet, think about how much money you need to be making right now and how long you want to be making that, because then you can start to back into what opportunities for work are going to be a good fit for your goals. And include saving money for any business interruption. We'll talk about this again a little bit later on as well, but in this particular year, I think so many people saw how important it was to save money. Probably one of the top tips that my senior doctors would like to share with many of you younger doctors that are just getting started is that they wish they had budgets and saved more for the future. I actually had a client when the pandemic hit that had been so good at saving money and on living less than her income that she actually was able to take her family to the lake for 6 weeks, not even think about all these concerns with the pandemic or being closed. They were able to enjoy that as vacation time. And that's the position that you want to be able to be in. You want to be so prepared for any type of business interruption that it's not as stressful for you as it might be for others. And I would encourage you to know your break even. So if you do own a practice, make sure to have a really good sense for how much money you need to collect each month to cover your overhead. And the way this is calculated is by looking at both your fixed expenses and your variable expenses. Your fixed expenses are those that will not change no matter how many patients you see that day or that month. Your variable expenses do change based on volume. So fixed expenses are typically going to be things like your rent, your utilities. A lot of your wages are considered fixed. Variable expenses will be lab expenses, clinical supplies, sometimes commissions on some of the pay that you may pay to team members. So you want to factor those in there, but also make sure you're adding in pay for yourself for your beside the chair time. In other words, how much would you have to pay another doctor to do your level of production? That really should be counted as overhead. And I would encourage you to include savings goals in there as well. So now you have a better idea of how much money you need to collect each month, and then you can back into what volume of production needs to be done to collect at that level and who can do that production. So the cash strategy on this tip is to use all of the items possible to create cash. You want to make sure that you have a very good sense for your tax deductions, what creates cash in the practice, how cash needs to be spent, and to have an idea for what is going to be coming next in your business. Now, before we talk about topic number 4, let's open it up for another poll question. We're going to be talking about the loans from the PPP options that you had. So if you would, click on the poll question to answer for us what type of funding you got. Sounds like many of you did not own a practice yet, so you may not have received much funding, but I'm curious how many of you received the EIDL grant or the EIDL loan You might have gotten the PPP money. In fact, even as an independent contractor, you could have gotten that. And we're now going through the HHS funding. So there was funding for round 1. If you offered Medicare services, round 2 was open to all dentists, and round 3 is currently open as well. These loans have been very confusing for many people. And as some of you saw, you were even offered new opportunities for unemployment that we've never seen before for part-time unemployment options. And it was unusual to have the federal funding that was also added to the state funding for unemployment. If you've been receiving unemployment this year, remember that will be taxable. So that's something else that will affect your income for the year. And we'll talk about the loans and how that may affect your income as well. Joyce, do we have some poll results to share?
Yes, we do. About 35% of the people have voted. So I'll be closing the polls in about 10 seconds.
Okay, great. Joyce, what were the results on that poll?
So the poll results show about 57% of the attendees received a PPP, followed by the EIDL grant. There were 20%, and then 25% are HHS round 1 or 2.
Okay, great. Thank you. So the next topic we'll talk about today is cash flow and how you can use some of these loans to your benefit and really what happens next in this process and some things to be prepared for as part of this. So as a big overview, we started off with the EIDL grant being offered, which for most of you would have been $10,000. There were some very early appliers who received more than that before the government changed the rules on that. There was also the EIDL loan, and that does need to be repaid. And many people received that for about $150,000, but that number could vary. Then, as we just learned, many of you received the PPP loan, so that money can be forgiven if the rules are met. And then HHS funding rounds 1 and 2 have already been closed out, but the HHS round 3 funding is still available, so you can still apply for that until November 6th. And for that HHS round number 3, you're able to apply if you had already applied for round 1 and 2. If you did not apply for one of those rounds, then you cannot apply for round 3. But it does make sense to consider whether or not you should apply for round 3 if you have already applied in the past. But let's start with the PPP loans, because one of the top questions that I'm getting right now is when you should apply for forgiveness. So I would share with you that, first of all, in an ideal world, we'd like for your 24 weeks to have ended before you apply. And the reason for that is because you're more likely to not run into some of the exceptions related to full-time equivalent rules or to reducing employees' pay by more than 25%. So you give yourself the best chance to meet full loan forgiveness if you wait 24 weeks. You have up to 10 months to apply. And in fact, many banks are still not accepting applications. I actually saw an email from one of the banks yesterday that they are just now about to open the open the loan forgiveness application process, but they're going to spread it out across the entire client base. So not everyone can apply at the beginning. So each bank is handling this in different ways. So if you can apply and you want to go ahead and apply, then try to use that EZ form if you can. There are restrictions that you have to meet for that. You cannot have reduced employees' pay by more than 25%. And in essence, you need to have the same full-time equivalents as you did at the beginning of this when you applied for the loan. So double check those numbers. And if you receive the EIDL grant now is when that will be repaid. So this has been confusing for some people, but what is probably the best way to think about it is when you received the PPP money, it was almost as if they had given you an advance on part of that by giving you that EIDL grant. So when your PPP loan is forgiven, hopefully you've met full forgiveness, which means that it will all be forgiven except that EIDL grant portion. Now, if you're buying or selling a practice, I would recommend that you start dealing with this issue as soon as possible. Still, ideally, the 24 weeks would be up. But if you're selling your business, you are required to let your lender know that you're selling your business, and they will probably have you sign forms to keep the PPP money in escrow until the loan is forgiven. This process can take 5 or 6 months. So it's important to go ahead and get that application in. You can still sell your practice now, but just be prepared that the bank will probably hold that portion of the sales proceeds in escrow. And then once the loan is forgiven and they receive that notification from the SBA, then you will receive that money back. If you're a buyer, make sure you ask the seller about this question, because the banks will be asking you about it as they get closer to closing time. And you want to make sure that the seller knows to have filled out that paperwork so that the process has been started. Now, there's the possibility that loans will be forgiven of $150,000 or less with much less paperwork. Right now, you are allowed to fill out an even more simplified form if you had a loan of $50,000 or less. So that has come out. And I know one of the banks that I work with sent out some new information on that this morning, that they are now ready to accept those applications. Many of my clients who received loans of $150,000 are deciding that if they're not selling their practice, they're going to wait it out a little bit, because it is on the table as part of the stimulus bill to potentially make this process even easier to get loan forgiveness. So that may be coming. So let's talk about the tax effect and cash flow here related to these loans. If you receive the EIDL grant that we talked about, that is not taxable income to you, and you don't have to repay it unless you receive the PPP loan. With the PPP loan, right now you're not taxed on that income, but the expenses are not deductible. And this is key to know with your tax planning that you're doing right now, so that you don't have surprises in April. Be aware that the current rule from the IRS is that the money that, or the expenses that you had when you spent that PPP money are not deductible. So that can be a very large swing in your income if you received $150,000, let's say, for a loan. Now, Congress has been very clear in sharing that that was not their intention when they created this program. So we are very hopeful that this will be reversed and the expenses will be deductible. But because it is an election year and the stimulus bill has not yet been agreed upon, it's possible we won't even know this until after the beginning of the year. The HHS relief grant, I would plan on that being taxable. The ADA is actively challenging that, and hopefully you won't be taxed on it, but I would assume worst case scenario on that for now. And then the expenses would be deductible. And keep in mind that state tax laws may differ. Many states are still trying to decide if they're going to accept the federal standards on this. So on the HHS funds that are being offered right now that you can still apply for until November 6th, you're more eligible to receive that money if you've had a decrease in revenue. And when we're looking at first quarter and second quarter compared to the same quarters of last year, or if you've had a large increase in your expenses. One piece of new information that came out a little over a week ago, once again, they've changed the rules partway through the process here, is that if you received HHS money, even in rounds 1 or 2, you're required to spend that money on PPE or COVID-related expenses, meaning any expenses you had to help you prevent, prepare for, or respond to the coronavirus situation. So that could include PPE supplies, hand sanitizer, supplies for patient screenings you're having to do now, HVAC repairs, those types of things. and they will be asking for documentation. We don't know yet what those forms look like. We don't expect it to be as egregious as it has been for the PPP loans because those are being forgiven, but you'll have until June 30th to spend the money, and the documentation and reporting will begin January 15th. So use the loan money wisely. Make sure you're using it in a way where you're fitting the standards for the full forgiveness, or at least to make sure that you're covered in case more questions are asked. And look at the best timing for you as to when to actually apply for the loan forgiveness for some of those. So topic number 5, let's move on to tax credits. There are ways that you can save more in taxes, and think about credits that you can even use for prior years. Many of you said that you do not own a business, so we won't spend as much time on this, but there is the payroll tax credit that is still available through December 31st if you have employees. What this really means is that this was part of the Families First Coronavirus Act, and if you're paying employees for either paid sick leave or paid family medical leave, you can reduce your payroll tax deposits by the same amount that you're paying the employee. So you'll just reduce the next payroll tax deposit that you make. If you are in this scenario, this is one of those years where I then more highly recommend a payroll company, because these are complicated issues and it can be difficult to start tracking what your actual payroll tax deposit should be. So this would be a time to consider one of those type services. All the W-2s are going to look different this year. There are a lot of elements to what's going to have to be reported this year. So of course, as you can imagine, there's a cap on this. You can't just pay the employees any amount and reduce your tax deposit, but that full payment to them. So if it's paid sick leave, you are allowed to have them take the first 10 days unpaid as far as the IRS is concerned for this credit, and you can pay up to $511 per day, but they can only receive $5,110 for the whole year. So once that's used up and has been met, then you can no longer receive the credit for this type of pay. I do recommend that you always reach out to an HR attorney or a dental HR specialist before deciding how to pay the employee. As you may have run into, these are complicated scenarios, and oftentimes there's more than one layer as to why a team member is out, and you want to make sure you're paying them the right amount and you're meeting the correct rule for the tax credit. Because for instance, for family medical leave pay, in that case, you're paying 2/3 of their usual pay, and your tax credit, which is a dollar for dollar reduction of your next tax deposit, is only up to $200 a day, but you have a larger cap on that of $10,000 per employee per quarter. So make sure you really know the details of why you're paying the employee and what that type of pay is for. One of the tax credits we've been looking at a lot for our clients this year is called the R&D credit. This is the research and development credit. It has not been used as much in dentistry as it has been in other professions. And this may be something that you want to look at if you have owned your own business for a few years. You can actually go back and amend the last 3 years of tax returns if you can take advantage of it. And I will share that usually people are either saving a lot of money through this strategy or they're not saving anything at all. So it really can vary widely based on practice. But if you have an E4D or a CIRAC and you're milling your own crowns, then that would be the type scenario where you would want to look at this. Also, the way you maximize the credit is if you have multiple team members involved in the production, because then we're able to include all of those wages in the calculation. You can use this if you have an in-office lab. Some of that will apply for this. If you have a 3D printer, if you're making mouthpieces, retainers, those types of appliances, then that also could be a way to be eligible for this. There are some companies that are very reputable in calculating these, and you do want to make sure that you look at a company that's going to be accurate, will give you the right reporting, but will also do it in such a way where you really understand what you're getting involved in with that credit and whether or not it fits for you. So the cash strategy for this topic is to use the tax credits when you can. There are tax credits that are out there for multiple states. In some states, we have even a retraining tax credit that can be used to reduce your taxes for state taxes. You have film tax credits in many states. So there are different opportunities, and we're even finding some opportunities by county based on what's happening in your specific county because of the COVID situation. So let's open up for our last poll question before we end with our last topic here. So our last poll question is, what type of business retirement plan do you have? You might have a traditional IRA on the side that's a personal investment, but we're looking for, if you have a business, do you have a SEP IRA or a simple IRA? Do you maybe have a 401k plan? If you would share that with us, that would be really helpful information as we finish up our conversation today.
Okay, we have about 30% of the vote in. It's quickly rising, so we'll give it about another 30 seconds.
Okay, that sounds good. Saving for the future is very important, and so we'll be talking about some of the ways that you can do that, and then we're going to open it up for questions as well. So if you have any questions that you'd like for me to answer today, I'll try to get to as many of them as I can. You'll also have my contact information at the end, and I'll be happy to answer questions afterwards as well if you want to send me an email. Joyce, what are the results looking like?
All right, so we're at 50% of the vote, so I'm going to go on and close that. And I'm going to share it. So, interesting. You have about 37% of the attendees have a 401k, 28% have none, about 22% have a simple IRA, and 18% have a SEP IRA.
Okay, that is interesting. That's pretty well spread out. Thank you.
Yeah.
Okay, so be prepared for lower income. This situation that we saw with the required closures was so unusual, and it affected almost every practice for at least 2 months. But senior doctors know that it's very easy to have business interruptions in income. When you lose that key front desk person, that can significantly change your income for at least a month. Or if you've lost your key hygienist, because patients have such tight relationships with hygienists oftentimes. So I really recommend that, especially after this year, you inspire yourself to start saving at least 8 weeks worth of expenses. If you own a business, you need to be saving 8 weeks worth of business overhead, and also 8 weeks of spending on the personal side, because that became so stressful for people during this time, because many dentists are used to spending a lot of what they make, if not all of what they make. And so that meant they didn't have much money saved up to be able to cover their home bills during this 8-week period of time. So I encourage you to save both types of those. Of course, many of us would really like it if you were saving at least 3 months worth of expenses, but start where you can and set a goal and just make yourself set that aside before you spend any other money. Always have an active business line of credit as soon as you're able to get one from the bank, because that is a way where you can use those funds anytime something happens, even such as something happening with equipment, where you need to do some really large repairs if something happens to the compressor or something. So then you can use that low interest rate line of credit instead of having to tap into your credit card. Paying off debt, especially for those of you getting started in business, can be a real challenge. So I recommend that you pay off the highest interest rates first, especially those credit cards. And if you have loans already, refinance those when the prepayment penalty period ends if you have a better option. Right now can be an excellent time to refinance. Some banks have some extremely low rates, even for an 18-month period of time. So I encourage you to look at that. Live a year behind in your income level. If you're not spending 100 or 110% of what you make, that's going to make it even more likely for you to eventually be working because you choose to, but not because you have to. And I would encourage you not to pay principal down on loans, even student loans, until you've maximized saving for retirement for the year, you've maximized your savings that you want to have as a cushion, and you've paid off that really high rate credit card debt. If you are a doctor who has taken out money from your retirement plan this year, we do have special rules on that right now. I would encourage you not to take these distributions because it's very difficult to get caught up on that lost rate of return. But if you did take the money out, or you really need to, you can withdraw up to $100,000. You will not have any penalties as you usually do for pulling that money out, but you will still pay the taxes, but you could spread that out over 3 years. And you don't have to take required minimum distributions on your IRAs right now. So I think one of the other keys that my senior doctors would tell you is that they wish they had started a 401k plan sooner. Many people are still using simple IRAs, and you really want to outgrow a simple IRA as quickly as possible. And the reason is because you can only save $13,500 a year, and that's simply not enough for most people to live off of in retirement, even if you're using that plan year after year. A lot of doctors don't use 401k plans because they feel that they're too expensive. And there is an investment in your retirement plan administrator to file the tax return and calculate all the numbers. But that's a small cost to pay for the rate of return you get for a significantly larger tax deduction and for being able to save more for the future. And that money is going to grow faster for you. So one of the interesting things here is that when you're first starting out in business, you can use what's called a SEP IRA. What's unique about this is if you don't have any employees yet, let's say you're an independent contractor, you're able to save up to 25% of your income in the SEP IRA with a maximum of $57,000 for this year, and you don't have to make a contribution for anyone else. So you can save a lot more than you can if you were just doing a traditional IRA or a Roth IRA. Now, I'll tell you that if you're an S corporation, the 25% is based on the wages you're paying yourself as an employee. You are required to pay yourself as an employee to keep your S corporation active. And so you would need a W-2 of about $280,000 this year to reach that maximum. If you are an independent contractor and you're reporting your income on your Schedule C and your personal tax return, then it's based off of 25% of your net income. If you do have employees or you're getting ready to buy a practice, you can still use the SEP IRA only for yourself for the first 3 years that you have employees. By year 4, you would want to change plans because it will be too expensive to use it at that point. Whatever percentage you're using to put in for yourself, you have to do the same percentage for the employees. So that's when sometimes people will move to the simple IRA. And then as I shared, I think that you should really want to be outgrowing that simple plan as quickly as possible and using a 401k plan to save even more money. So the cash strategy for our last tip here is to save for your future efficiently. Really think about where you're starting. Think about what those long-term goals are and where you want to go so that you can save as much as you need to for all of these future goals. Here's my contact information. I'll be happy to answer any questions for you if you'd like to ask those now or if you'd like to send me an email later. Joyce, are there some questions that you'd like for me to answer while we're still on together?
Yes, we do have several questions. So, ladies and gentlemen, this concludes the lecture portion for today's webinar.